Hi everyone, welcome back to the channel X and Yong. Buying stock without understanding the fundamental of the company is a risk. We can easily be affected when there is huge sell-off in the market, which is the current situation right now. There are many ways to do your own due diligence. You can look at the company's report to get an update on the financial performance. In this video, I will be using MooMoo as a platform for quick analysis of the stock. We will be looking at Meta platform, which is previously known as Facebook. The ticker is FB. In the search button, we will key in the ticker, and then we can click on this button to open the profile and financial window. There are a few questions that we should ask ourselves before investing in the stock. First, is the company business model sustainable? Second, is the company financially healthy? Third, is the company over or undervalued? Before we start, appreciate if you can give us a like and subscribe to our channel for the YouTube algorithm. Thank you. We can start from the company overview, company profile. The company name is Meta Platforms. It's a US stock. Current market price is $198. This company is listed since 2012 on Nasdaq. To answer the first question, is the company business model sustainable? We should have an understanding on how the company is earning its revenue. We can look at the profile here. Meta Platform develop products that enable people to connect and share with friends and family through mobile devices, personal computer, VR headset, wearables, and in-home devices worldwide. There are two segments. First is the family of apps, including the products such as Facebook, Messenger, Instagram, and WhatsApp that allow people to share, connect, and communicate privately or even for business purposes. The second segment is the reality labs, provide products related to the virtual reality, include the hardware, the software, and content that make people feel connected. Do we know which is the main contributor of revenue stream in Meta? If we do not know, never mind. We can find out under financial analysis, main composition. 98% of the income come from the family of apps, which are the Facebook, Messenger, WhatsApp, and Instagram. Only very little portion, less than 2%, the revenue come from the reality labs. Maybe we should ask ourselves, if today we are not using Facebook, Instagram, WhatsApp, and Messenger, what other social networking apps will we be using to share, communicate, and check other people's profiles? What other means will the businesses use to do their advertising? There are definitely other options like YouTube, a subsidiary of Google, a platform for business to do their advertising, which is the same as you are watching this video. There are advertisements. There are alternatives such as LinkedIn, Snapchat, and Twitter for people to share and connect. Those are definitely competitors of Meta. However, Meta is still having the largest market share of social media visitors, followed by YouTube, Twitter, and Reddit. For right now, I think most people are still using Facebook and Instagram. The reason is it is a very familiar social media platform that we have been using since childhood, and a lot of our friends are currently on Facebook and Instagram. In the past, Meta has successfully grown its revenue from the family of apps. It proved that social networking apps are a viable business model. In the future, we just need to bear in mind that will there be any disruption to the social media platform? To answer the second question, is the company financially healthy? Let's take a look at the profitability of the company. In the financial statement, currently we have the latest quarter, which is Q1 2022. Okay, on a year-over-year basis, we look at the diluted earnings per share (EPS). The formula is net income divided by the total number of outstanding shares, which is a measure of profitability. The higher the better. So for the past 4 years, EPS has been growing from 7.57 in 2018 to 13.77 in 2021, although there is a slight drop in 2019, which is a healthy indicator. For quarterly result, as of Q1 2022, the diluted EPS has slightly dropped to 2.72 from 3.67 in the previous quarter. Surely, investors are slightly disappointed by this. Then we can check its free cash flow, whether the company able to generate enough cash flow to pay for its operating expenses. We will avoid companies with negative free cash flow. It's a red flag that the company might go bankrupt anytime soon. As of Q1 2022, Meta is having a free cash flow of $8.64 billion on hand. It's a positive, huge number. Next, we can look at the key indicators for efficiency ratio on how efficient the company is using the shareholder monies or the company assets to generate profit. The higher the ROE, the better. The 5-year average ROE is 25.65% and the 5-year average ROA is 21.15%. Generally speaking, those are very healthy numbers. There's not many companies able to have a ROE of more than 20%. Of course, this number has no meaning if we do not make comparison to its competitors. So we can use the same method to compare with companies like Google, Twitter, or other internet companies. I will leave this to you to do your own due diligence. Do keep in mind that every company is unique in terms of branding, operation, and how they generate profit. To answer the third question, is the companies over or undervalued? We definitely want to go for undervalued companies. Let's check on the analysis tab. We will look at the PE ratio of Meta. The current PE is 15.06, meaning investors are willing to pay $15.06 for each dollar of the company earning. While the sector average is 20.14, it seems that Meta is slightly undervalued compared to the sector average. If other people is willing to pay this price for internet companies, we can buy Meta at $15. Isn't it a good deal? But of course, this is just a very rough estimation. There are certainly other companies with lower PE. We just have to do more homework for that. So yeah, that's all on how we can use MooMoo to do a quick analysis of the stock. It is easy and straightforward. Hope you enjoyed the video and learned something from this. Don't forget to click the like button and subscribe to our channel. We will work on another similar video content in the next one. Thank you and see you again.